Hi, Dave here, and we're seeing more and more news every day around the 2020 election and what this means for the economy and what it means for our investments. And I'm hearing more questions from clients too around this topic and how it might affect their retirement and investments. So I wanted to make this video to give you an answer and really give you some thoughts on preparing yourself for different potential outcomes that could be. The big question is what's going to happen to the markets, whether it's Biden or whether it's Trump. It's common to think and believe that the Democratic candidate, if they're favored to win, that usually scares stocks. People think that it scares stocks more than if it's a Republican candidate favored to win. And there actually is a pattern of that happening in past years. Take a look at this slide from First Trust Portfolios. I'll include links to everything that I show you in the description below, but take a look at this, the S&P 500 since 1928, and if a Republican was elected, what the results were for the S&P 500, and then if a Democrat was elected, you could see that Republican candidates, the market reacted better those years. But what's interesting is in the following year, the inaugural year, the reverse actually happens. Take a look at this from Business Insider. This blue line shows the first year of a Democratic president, the average, and then the red line is the Republican president. So it's almost like it flip-flops from the first year to the inaugural year. When you look at the averages, it all averages out to be almost the same. So it almost doesn't matter when you look over 2 years. It's just an interesting data that shows some patterns. But the big thing to remember is that don't make decisions based on things that have happened in the past or what you think might happen, because it usually doesn't work out. So these are just interesting patterns to look at, but be sure to plan accordingly, and we'll talk about that coming up. So really, speaking of patterns too, here's an image from Dimensional Funds showing the past 9 presidents and what the results were for the S&P 500. Sometimes they compare the S&P 500 to the total market. So that's what we're looking at right now. This is, if you can see that, I'll erase these, but this is the last 9 presidents and what the S&P 500 did. Now, do you see any patterns here? Well, if you're like me, then you don't see any patterns because there are none. There were no patterns for who is president and what the market does, because there's so much more that goes into the returns of the market than just who the president is. So it might have an effect for some period of time, but really, when you look at total, if you're an investor and you're investing for more than 1 or 2 years, then there's no pattern to who's president and what the markets do. That's the facts. At least that's what the data has shown. Now, some people bring up the concern, well, what if it's what if it's a one-party Congress and president? Then couldn't that be a risk because so much more can get passed during that presidency? Here's what it looks like when, let's take Democrat as a president and then Democratic Congress. That's what the result has been. This is from 1950 to 2019. This is also from First Trust Portfolios, but you can see there's no pattern here either. It actually looks better on this side if you had to show the averages. So it doesn't matter if it's full Democratic Congress or if it's full Republican or if it's split, whether it's a Democrat president or a Republican. So I just thought that was interesting. There's no clear pattern there. Now, it's common to have that feeling of, or the view that if my candidate wins, then things are going to be great. If my candidate loses, then things are going to be bad. But looking at the numbers, it might not be as bad as you think. I do have a few pieces of advice that are going to be helpful. Number one is very simply, don't try to predict anything. Just because you have a feeling or you think that you know how it's going to turn out, or really if you look at the patterns and think, okay, I'll make decisions based on the past, just don't do that. Don't try to predict it because it usually doesn't work. And really, I mean, look at what happened in 2016. Not many people predicted that Trump was going to win, and people who did think that thought the markets were going to suffer because of the unknown that was going to happen. So Don't predict anything. Number two, remember that the headlines are designed to grab your attention. We're going to see a lot more between now and election day with these headlines, and they're just looking for eyeballs so they can sell more ads. I got a video from a major news source from a client sent me, and it was talking about selling out of everything because so-and-so is going to get elected or re-elected. I don't even remember, but either way, it scared her. We had to talk through it and look at the plan to see that we're prepared for any scenario. Number three is focus on what you can control. Create that retirement withdrawal plan for various scenarios. And if you need help doing that, go to our website, streamlineplanning.com, and then sign up for a free planning session with me, and I can go over that with you. The fourth thing is look at the big picture. As an investor, we want to capture that long-term growth of the capital markets regardless of who is president. So last thing to look at is all the different presidents and what the market, or really the S&P 500, has done each term. And you can see that people who are long-term investors, they do get rewarded over time. So I hope that was helpful. If you've talked to someone who has brought up worries or concerns about the election or markets, share this video with them and maybe it'll help them. And then also I'll be putting out more videos like this, so be sure to subscribe so that you don't miss the next one, and I'll see you there.